My guy, it's allowed 8:12 a.m. Eastern African time. I have just woken up this morning and I feel it is good. I first of all give you some of the reasons which made me to sell gold overnight during the Asian session, and some of the reason why I should also continue looking for sales today, even if somehow gold is turning bullish, but I think it is good for us to do some more sales. One, before we go into the technical analysis, as you know what the commercial traders are doing, or let me say the hedgers are doing with gold, majority of them are selling gold. And despite most of them selling gold, we say that commercial traders are like those people that own gold. They are predicting that gold will drop, and that is why that is one of the reasons that makes me feel that gold may continue selling, because if the owner is predicting that gold will sell, who am I to go and buy? Even though still buys opportunities, sometimes they are there. Number two, on Friday we experienced this aggressive buy opportunity here on gold. It was as a result of some breaking news from the Iran. The Iran proposed a ceasefire with the United States of America, and actually that ceasefire, if we were not attentive, it could have taken some of our money, because it just came all of a sudden. It was a breaking news, especially during the New York session on Friday. However, the market left us with a very smart structure, and that is what I want to show you. Go into your daily time frame. This is gold. Go into your daily time frame. In your daily time frame, as you are all aware, gold is bearish. Gold was reacting from a 50% extension level the whole of last week, and that is why we were selling it. However, also on Friday, gold was coming down after reaching this mitigation zone. This is a mitigation zone because it was initially, the gold was initially unable to break here, but with time it broke and never came back. So the reason for it breaking here, this zone become a mitigation zone. So gold was reacting from this mitigation zone on a daily time frame. Then after retesting, it was just reacting. After retesting, I dragged a Fibonacci retracement from here to here. This is the Fibonacci tool, from the recent lower high to the recent lower low. And my guy, I think you can see, this is the recent lower high to the recent lower low. You can see gold extended up to this point, up to the zone, which is 0.5 to 0.618 extension level. That is the maximum extension that if a trade has to continue, gold does not have to violate the zone, the region between 0.5 and 0.618. And as you can see on a daily time frame, when it reached this point, gold started going down. So that is one of the reasons why this week I was also looking for sales on gold, because this was just a mere retest. It was not a continuation of the trade, because if it was a continuation of the trade, it could have broken this extension level. But now, after reaching this 0.5 and 0.618 extension level, gold started going down again, so confirming that this was just a retest and it might continue with the bearish momentum. That is on a daily time frame. Let's go into a 4 hours time frame for us to get more clarity. Come here, come here. In 4 hours time frame, the market is very smart. On Friday, the market bought all the way to this zone. And the reason why it bought all the way to this zone, it was just to manipulate most of the retail traders who do not understand the liquidity concept. Some of them thought that gold has broken this zone. If you go into like lower time frame, they think that gold has already broken that resistance zone here. However, gold has not broken it. Gold bolt all the way to this fair value gap. A fair value gap is a form of imbalance, and fair value gap consists of internal ledge liquidity. There are two types of liquidity: the external ledge liquidity and the internal ledge liquidity. Internal ledge liquidity lies inside a fair value gap or inside an imbalance. External ledge liquidity lies in four major areas. One, in major swing highs and swing lows, in major supports and resistance, in major double tops and double bottoms, etc. As you can see here, this zone is already a resistance zone. This zone was already a resistance zone, and liquidity is resting above. So when the liquidity is resting above this resistance zone, for the market to go down because it was going up, it has first of all to clear the liquidity above. Also, there was another form of liquidity, internal ledge liquidity, which is represented by this fair value gap. So for you to confirm that the market is now ready to push down massively, it had first of all to clear liquidity which is resting above this resistance zone and which is resting inside this fair value gap. And as you can see, once the market cleared this liquidity, it started going down. So this internal ledge liquidity, which has been cleared, confirmed to me over the weekend when I was doing analysis that gold has to continue with the bearish momentum. Let's see again. This is in 2 hours time frame. This was the internal ledge liquidity that has been cleared. Gold has given us a selling pressure, and after giving us a selling pressure, I drew a trend line here. I dropped a trend line which has got 3 touches, 1, 2, 3. So gold manipulated this trend line by trying to lie the little traders that it has broken up, but then all of a sudden it came inside the trend line, and right now gold is selling in the margin of that trend line. As you know, this trend line also acts as a resistance, and you should be selling whenever the market touches the trend line. Let us go down. Into 1 hour time frame, the market opened up here with a small gap up. The reason for that gap up was because of what? Was because of those peaceful talks. There was some gap up, very small gap up for gold. I was targeting gold to come all the way back to this resistance before going down, but gold confirmed to me that it won't go up, but it will go down through forex expiries and option. I opened the option table and I saw that in this zone 4621.25 there were more orders placed by the dealers and the price was unable to push up. Also, there were these two rejection candles. These two rejection candles, it rejected everything above here. I don't know whether you can see. There were these two rejection candles which rejected everything above here after clearing liquidity, and that is how I joined the sell move and I captured over 170 pips. I saw some people were targeting buys here even though it worked, because as you know, market will always react within a fair value gap or an internal ledge liquidity which is listing above an order block. There was a 15 minutes order block here. There was a fair value gap here, and when the market reached there, it gave them some temporary buys. For today, I'm also looking whether gold will continue with the bearish momentum or it will change character upward and turn bullish. Thank you very much for paying attention to this matter. That is my view. It is not a financial advice, but it was meant for educational purpose. Thank you.